I'm Christopher Van Slyke. We're a wealth management firm that focuses on small business owners and their families. I think what's unique about our business is that, unlike most of the industry, it's been client-centered. Most of the investment industry is focused on products that are manufactured that are then married up with clients. We think our business focuses on clients and helps them locate the services and products they need. My investing approach is different. Most of the industry focuses on trying to foretell the future and anticipate the market's next move. Our philosophy focuses more on being patient and diversified and letting markets work their magic. It's pretty clear if you look at what happens to investors that the difference is their ability to maintain their discipline during these difficult times. The first time I really got a taste of what this world was like was in 1987. I was a college student at the University of Texas and majoring in finance, and I got a call from a family member in Houston who was quite successful and quite wealthy. And as many of you may remember, the market dropped some 30% in a week, and my family member was quite concerned, as you can imagine. I explained, hey, I'm only 19 years old. I'm not sure if I'm the guy to ask, but I'll be glad to go to where I think the answers are, and that was in the finance department at the school I was attending. And I did go to those folks, and they asked me some questions. How old is your family member? What does their portfolio look like now? Et cetera, et cetera. And their advice was do nothing. So I called my relative down in Houston, and I relayed the information, and I could hear the tension evaporating over the phone. So my family member took this advice, and they maintained their portfolio. And as you know, a year later, by 1988, the market had returned to where it was, and this particular family member was able to go on and live their life and retire successfully. Most of the investment outcome is out of our control. What we can control are costs and diversification and the mix of assets in the portfolio that'll give us the risk-return characteristics that we want. All other things, guessing about the future, zigging, zagging, those don't really matter. So what we want to do is put together a portfolio that controls costs, that's diversified, that you can maintain for long periods of time. Financial success is not usually a big home run. It's 1,000 little decisions. And financial failure is the death of 1,000 cuts. So the idea that there's someone else who knows you, who cares about you, who understands what you're trying to do, can result in the long run in a much better outcome. That's really the value proposition. It's not that you're going to be overwhelmed by the secret. It's sometimes just not making mistakes.